12th of September, thanks for joining me. I'm going to run through my analysis and show you why I chose some of the trades that we did yesterday. And then I'm going to, of course, look for some more trading opportunities for the rest of this week. We've got the CPI number out tomorrow. But first, I want to tell you about a free 5-day challenge. I spent the summer writing and recording this challenge, which deals with all the psychological aspects of trading that I have learned the hard way over 35 years of trading. All the mistakes, all the confusion, the frustration, the anxiety, everything that's gone through my head and caused me to lose money, all the usual trading problems that you will all be experiencing, how I overcame all these psychological blocks in order to become a consistently profitable trader. I want to teach you all of the techniques in this free 5-day challenge. So please, in the description box below, click the link, get signed up. You'll get a video every day for the next 5 days. Don't miss this. It really is 35 years of experience coming out over the next 5 days to help you deal with your trading. Right, enough said. The other thing I want to say about technical analysis, it's really come to my attention over the last few months how traders are using TA to try and guess the direction of the market each day. People are saying to me, I bought gold, I bought the euro versus the US dollar. Where do I get out? I'm like, why did you get in? Oh, well, I looked at the chart and I thought it was going up, or I saw you had a buy level on your trade ideas sheet. So I thought it's going up. So I just bought it. Guys, this is not the way you use TA. Okay. TA is not about guessing the direction of the market every day. I can't do it. And I've been doing this 35 years. Warren Buffett will not be able to tell you where the stock market will be on Friday close, nor will George Soros, nor will any of the best top fund managers, the most successful investors and financial market traders. We don't know. If you use technical analysis properly, you can identify low risk trading opportunities in the direction of the prevailing trend. So if I'm looking at a market and it's in a bull trend, if it pulls back, if it has a correction, I'm looking for support levels at which I can buy because I believe that will be a low risk trade opportunity. I'm trading in the direction of the trend. I'm buying at a strong support level. I can have a pretty tight stop, but if the trade works and there is a good chance of the prevailing trend continuing, then I will be able to watch my trade make me a nice profit as we bounce back in a bull trend, or if we hit a resistance level in a bear trend and the market then resumes the bear trend. That's what I'm trying to do. I'm trying to find low risk trade opportunities with a relatively tight stop compared to a relatively large target for profit taking. I am not looking at TA to guess. Please get out of that mentality where you're trying to pick the direction for the day. You're just not going to make money in the long term doing that. You want to learn how to identify low risk trade opportunities, then just follow me. Go back over all the videos that I've put on my YouTube channel over the last 10 years. You can learn my technique. It's pretty simple. So anyway, please just get out of that mindset where you think you've got to guess the right direction for the market every day, and instead start looking for low risk entry points. Okay. And we're going to try and do that today. So we're looking at gold. Now, the first thing I do is I look at the trend. Okay. The trend since June has been, well, sideways consolidation at best, but just all over the place. We sank quite considerably, but then we made this very strong recovery. So again, today's direction, I haven't got a clue. So what am I looking for? I'm looking for this pattern or this channel to trade. Since the 6th of September, we've been trapped in this channel. It's only at this stage that we know it's a tradable channel because the trend line's been tested 2 or 3 times, twice on the downside. I can call that 3 times on the upper trend line. And we've got moving averages on the 1 hour chart, the 200-hour moving average, the 500-hour moving average, reinforcing these boundaries. So that is my trading strategy for gold. Buy at the support level, sell at the resistance level, wait for the breakout. Dead simple. I don't know which direction it's going. I don't know whether we'll come up and test the resistance. I don't know whether we might even break above there. I don't know whether we'll come down and test the support or break below it. I've no idea. I just know that these are the levels that are worth trading for a low risk opportunity. If you're a subscriber and you've been getting my signals, then you'll know that I already picked that as a level before I had this upper trend line. We were selling up here around 1926.30. We've done that for the last 2 or 3 attempts at that level. Why did I choose it? Well, it's a combination of fibs and some information on the 4-hour chart. I'm looking at the 1-hour chart now. Luckily, they worked, and therefore they have formed the upper trend line to this channel. WTI crude oil, the US contract, has been in something of a bull trend since the middle of August. Now, if you've been following oil, you'll know that I picked the low in the mid $60 area. There was a very clear reason to buy down there. If you haven't seen the reasons, go over my videos. You'll see the reason why oil is rallying. There is a very technical reason, and I think it will continue to do so. According to the hourly chart, it looks like we've got a bull flag here. The trend lines are obvious. You can put those trend lines on your own chart. Then you can trade the flag pattern and wait for a breakout. It did look like we had a potential breakout yesterday, but we pulled back quite quickly. So we had some big moves in the yen on the open on Sunday night, Monday morning, very strong on comments from Bank of Japan. Not going to go into that right now, but I had some buy levels on yesterday's trade sheet. Canadian dollar versus Japanese yen, New Zealand dollar versus Japanese yen, and in purple there because the targets were hit. Why did I buy Canadian dollar versus Japanese yen? You're down at 107.40, 107.20. Again, just the pattern. Very simple. Probably a flag, but it's definitely holding the trend lines, as you can see. So we dipped to that trend line, bounced off it, and now we're mid-range. So again, I'm just going to wait to see if we test the upper trend line for a short, the lower trend line for a buy, and I'll just keep trading that flag pattern until it breaks, and then I'll try and go with the move. New Zealand dollar versus the Japanese yen. We were buying down at 86.40, 86.20 yesterday. Why? Lower trend line of this triangle pattern. We're going to have to break soon, aren't we? Because we're coming to the apex of the triangle. So I'm going to be watching for the breakout swing trade opportunity. The moving average has obviously been flatlining for quite a long time. Hopefully, this is going to be like a coiled spring, and when it moves, it's going to give us a really good opportunity. But I've got to be patient because we're going to get some false breaks to suck us into a position that won't work. So timing is absolutely key for this breakout. Aussie yen, I'm actually just waiting for the breakout trade here. I don't know when it's going to come. Euro yen, I did try this trade again in a sideways pattern. Most of the yen pairs are. I tried along at the lower trend line. We did overrun a little bit, to be fair, but we have bounced back above 157.00, and we did hold above the stop level. So I'm looking for the first target, 157.50. I think we've got there already, actually. Yeah, we've hit the first target, and I'm obviously hoping that we continue a little bit higher. But if we do sustain a break below the trend line, then I'm going to be looking at a short position. The New Zealand dollar, the Aussie dollar, some of the dollar pairs are the ones to trade because the dollar is pushing higher. And I have been getting us into some long dollar trades that have been working quite well. So we're short the New Zealand dollar versus the US dollar at around that resistance level up here where the moving averages are and the fib level. Same for the Aussie dollar and the euro as well. The euro actually topped almost exactly at the sell level, just one pip from my sell level. So that was slightly frustrating. I had a combination of moving averages on the 1-hour chart and fib levels and these little swing points here, but we just missed it by a pip. If you did manage to get into that short, you've done well. Congratulations. I think that's going to work. There you go. We've even got a trend line there from this little pattern to give us some resistance levels there. Cable did quite well. Look, hit a nice sell level, 23.6% fib, previous little swing lows, and we're holding below the 200-hour moving average. So the cable, euro versus US dollar, New Zealand and Aussie versus the US dollar, they are all in bear trends. It does look like the dollar is pushing higher and will continue to do so. Don't forget to sign up for my 5-day challenge. Click the link below and then make sure you're subscribed to the channel so you know when the next videos come out.